Japan's property prices have risen significantly in recent years, so some investors are asking the same question. Should I wait for Japan's real estate market to crash before buying? It sounds like a smart strategy. Wait for prices to fall, then buy at a discount. But in reality, it's not always that simple. Japan has experienced major property downturns before. The collapse of the asset bubble in the early 1990s and the global financial crisis in 2008 both pushed real estate prices lower. But those periods also created another problem. When the economy becomes unstable, banks often become more cautious about lending. So even if property prices fall, getting financing may become more difficult. In other words, the moment when properties look cheap may also be the moment when they are hardest to buy. There is another risk: interest rates. Imagine a property costs 30 million yen today with a relatively low interest rate. If you wait and the price falls by 10%, that may look like a better deal. But if mortgage rates rise during that time, your total financing cost could actually be higher. A lower purchase price does not always mean a lower total cost. There is also the question of property selection. During a market downturn, owners of high-quality properties may decide not to sell. They can simply wait for better market conditions. As a result, the properties available at large discounts may not always be the properties you actually want to own. For foreign investors, there is another important point. Japan's real estate market may become increasingly divided. Population decline could put pressure on property prices in some suburban and rural areas. Properties far from stations or in areas with declining populations may face weaker demand. At the same time, major cities, convenient locations, and areas benefiting from redevelopment may continue to attract buyers and tenants. So instead of asking, when will Japan's property market crash? Perhaps the better question is, where will demand still exist 10 or 20 years from now? Trying to perfectly time the bottom of any market is extremely difficult. A property that generates stable rental income in a strong location may still be a good investment, even if market prices temporarily fall. On the other hand, buying a cheap property in an area with declining demand can be risky, even after prices have already fallen. For real estate investors, price is important. But location, rental demand, financing costs, and long-term population trends may be even more important. Waiting can be a strategy, but waiting only because you expect a major crash can also mean missing good investment opportunities. The goal should not be to buy at the absolute bottom. The goal is to buy the right property in the right location at a price that makes sense for your investment strategy.